Well, let's go back to our panel, because we were just talking about, Eric, we were just talking about AI and the role that that's playing, especially for the Magnificent Seven, or I guess I should say the Magnificent Five, that you continue to like here. When you see a name that isn't in that five category but is starting to realize the value of AI, how does it speak to this secular story within the stock market?
Well, I think these five are really separating themselves from the rest of the market, and you can see that in the numbers. If you look at the earnings estimates for these, for these five names, they're moving higher. They're seeing their growth rates accelerate. They have the secular trends. And then you see what's going on, for example, in small cap. Small cap, the group is underperforming for a reason. Estimates for 2024 were $92 a share about a year ago. They're now 82. So estimates there continue to get hit. They're most hurt by the constriction that we've seen in lending, by yields going higher, by what the Fed has done. They've been most hurt by that, and they're feeling the effects. And meanwhile, you have these high cash flow secular growers that are continuing to put up the numbers. And so although there's been a sharp outperformance in these mega cap names, we think that it's, that relative outperformance is justified and will continue from here.
Bob, I think about Chair Powell's comments in the 60 Minutes interview over the weekend. He basically reiterated what he said at the FOMC press conference last week. But he was pretty blunt in saying that, like, you know what? March is really very likely, very strongly not on the table here, and that as of right now, they're still going to forecast 3 cuts this year. I mean, the Fed funds futures market is moving back towards correction and moving back towards the Fed speak. But yes, I realize we had a down day for the market. When you still see stocks this elevated and so many cuts still priced into the market here, is it sustainable in the near term? Are we really due for a pullback or a correction?
Morgan, obviously we'll get one at some point in time. Who knows what the cause will be? But I think you can't have it both ways. You can have the economy accelerating and double-digit earnings growth, which is still the consensus, while at the same time, inflation comes down and the Fed cuts, you pick your number 5-6 times. One of those things doesn't make sense. You can't have your cake and eat it too, but the market's acting that way, especially now that the multiple's over 20 times, which I think is a reason to have a little caution.
So, Eric, when will it be time for small caps again?
So, I think it's really going to be when their earnings estimates bottom, and that's probably going to take, some time. People will use it when you look at the divergence. Like right now, for example, small cap relative to large cap is oversold. It's about a 30 RSI. So my guess is there will be times where you'll see these bounces, but I think those are going to be short-lived. Especially because we do have the Fed that is going to be cutting, this year, but the Fed is going to be in restrictive territory for the full year. Probably north of 250 bips above inflation for at least all of 24, even with those cuts.
Okay.
So in that environment, it is a tough environment for the small cap name.